You're watching The Money Show on ET Now. Well, let's welcome on the show now Kalpesh Ashar of Full Circle CPA. He's a certified financial planner. Kalpesh, thank you for joining us today on The Money Show. So to start with, the last 1 to 2 odd months, we've seen quite a nice uptick come by in gold prices, something that, was on a bit of a pause, in the earlier part of this year. So how are you looking at this, move in gold? What is your view on gold as an investment right now after this run-up?
Thanks, Mubina. See, gold, in fact, has been having a golden run, to say the least, in the last, I think, 2 to 3 years. And as the asset class goes, it shows up quite dominantly when there is a certain crisis looming on either the economic front or the social front. And this time, it needs no saying what type of crisis we all are undergoing. So, in fact, when you see that just a trend, if you want to follow, that the year 2019, we had a return of almost 20 to 22% in that year in gold. Year 2020, we had a return of almost 25%. Then there was a certain lull, which we experienced in the last 4 to 5 months. And then, as you rightly said, everything was stagnant. And in the last couple of months, again, we've been seeing a slight rise in the gold prices. So just to put it in the right perspective, gold has shown what it stands for in the last couple of years, and going forward also, I feel there are going to be two types of people who are going to judge gold as an investment from the current levels. One is, obviously, people are going to look at it as the old tried and trusted hedge in your portfolio, which you require against all the other asset classes. And true to that nature, it will do its job given a long-term time frame. But the more important part, Mubina, I would like to tell viewers here is that it has shown up its true sense as a contingency, fund. I would say people need to keep in their financial profile, because many of the people who've undergone these crises, if they had gold with them in paper form or in some physical form, it has come to their aid a lot. It has come to their help a lot, because if they had not followed the financial planning process, if they didn't have a conventional contingency fund, the gold has been able to survive for them and sustain their finances. So look, going forward, I feel that people should, have their financial planning in place, but don't look at gold again as a runaway type of an investment class. What type of the results it gave in the last couple of years, because that was, I think, a very phenomenal type of a phase which we all underwent, and God forbid we don't want to undergo that time again in the last couple of years. So if things are, by God's grace, going to improve, if we are going to have a positive outlook for time to come, obviously gold will have its role to play, but as its own tried and tested hedge to the portfolio, and surely should be a part of the portfolio. So no need to get inadvertently excited. There might be spikes of 5 to 10%, but again, it might mellow down.
Okay, so Kalpesh, to what extent would you look at gold as a return generating asset? What's the place and what's the role it plays in an individual investor's portfolio then?
So obviously, I've always said that gold has to have a place in your portfolio, because unlike the other two financial assets, that's equity and debt, and some extent people have real estate as well, gold forms a very strong underlying security which people have maintained in their portfolio through the ages. But do not go too gung-ho about it. And in spite of any conditions we have undergone, whether good, bad, or the ugly, I think it should occupy not more than 5 to 10% of your entire financial portfolio. So this only includes, I'm talking about your investments in either proper gold, which you've purchased physically in the official way, or the paper gold means which we have right now, that is either the gold ETF, the gold-based mutual fund, the sovereign gold bond funds. And do not consider the jewelry which people have in their homes as an investment or a part of the portfolio, because that is more of a decorative purpose, and that should not be ideally mixed up as an investment portfolio portion.
So how much of a portfolio then should be put in gold, if you could sort of reiterate that? And, what's the best way as well of investing in gold? And additionally, Kalpesh, we've discussed this before as well. Many of us consider the gold coins, which we may have got as gifts, or, our jewelry, which may be lying with us or in our bank lockers, as well as an investment in gold, which in a way it is. Our money is blocked in all those assets. Do we consider that as well as being a part of our investment portfolio?
Yeah, so I'll reiterate on that, gold should be a part of your entire portfolio, not more than 5 to 10% in terms of, holdings. Secondly, as like what you said, if you have gold coins or if you have, physical gold bars, which people have, and that is available for, either selling off in case of a crisis, or exchanging it, or trading it for, want of creating some other asset, or shifting your asset profile, asset allocation, then well and good. But genuinely, I'm of the school of thought that jewelry, when it comes to jewelry in India, what we call as Sridhan, I don't think it's a part of a proper financial portfolio, because generation-wise, it's been, moving from, I would say, conventionally a strong cupboard to another strong cupboard, and it never surfaces out. So the gold coins, obviously, the gold bars could be construed as a part of your gold portfolio. But again, don't go too overboard on purchasing it, because there are many other lucrative asset classes which people might miss out on that. And if you're under the proper guidance, if you have proper research in equity, and if you have short-term goals, then you have debt. If you have long-term goals, you have equity to fulfill those goals. So you have these asset classes which are much more lucrative. And as far as holding the gold thing goes, I think the e-gold, the paper gold, is the best way to have gold in your portfolio. So today you have the gold-based ETFs, the gold-based mutual funds, which offer easy liquidity, and there is no constraint on even investments in gold-based mutual funds. You can invest as low as an amount of 500 rupees and buy your gold. If you want to buy even the sovereign gold bond funds, it is good, but the only issue there is it's got a lock-in period of 8 years, and after 5 years, you can have the option of coming out of it partially. And even the sovereign gold bond funds, Reserve Bank of India guaranteed product, it offers a 2.5% type of an interest rate. No other gold, I think, holding gives you that option of giving you an interest rate. So I would always be of the advice that have your gold portfolio in the paper format. There is no tension of any storage which you have of keeping safe deposit lockers and all that stuff.
All right. Okay. I just had one more question, but unfortunately we're a bit short on time. So Kalpesh, we'll have to let you go on that note. Many thanks for joining us. Really appreciate you giving us your time today on The Money Show.
Thank you very much.
And ladies and gentlemen, with that, we'll wrap it up on today's episode of the show as well. Thank you so much for watching. Don't forget to stay in touch with us on themoneyshow@etnow.tv. We'll continue monitoring that email address and answer your questions and queries over the course of the next few days.